The Trump administration is defending itself amid reports that the president and his family could benefit enormously from Mr. Trump's new tax blueprint. An analysis by the New York Times found that the president could save over $1 billion, including tens of millions in a single year under the new plan.
National Economic Council Chairman Gary Cohn was asked repeatedly yesterday whether the president would benefit from the proposed changes. Here's what he had to say.
How can he say that this is not a plan that would help him?
I think what the American people are concerned about is their financial position. I think what they're concerned about is when they go to work every week and they get their paycheck at the end of the week, how much do they get to keep?
Don't you think it would be a good idea if the president proved that by releasing his tax returns?
Like I said, what we're trying to do here and what we're all working on in the White House is to increase the lifestyle of American citizens.
You've been asked a question twice and you didn't answer. I'd like to get you to answer this because I get your messaging on the middle class. You've made that very clear. But this tax plan as it stands now appears that it will benefit the president and his family. Why not just be candid about that?
Look, I've told you it will benefit the middle class. I think that's what American taxpayers care about, what they take home. They care about what they have to spend. That's what they care about. That's what I care about. I care about what I pay in tax. I bet you care about what you pay in taxes.
Let's bring in Alan Rappeport. He's an economic policy reporter for the New York Times, and he joins us now from Washington. So, Alan, lots to unwrap, not only in the story that you wrote in today's New York Times, but the fact that Gary Cohn doesn't know the value of a dollar. At one point in some of those comments he made, he talked about returning $1,000 to middle-class people so that they could renovate a kitchen or buy a car. I don't know what kind of kitchen you can buy for, renovate for $1,000 or buy a new car with. But let's start with this question that a lot of people have right now: how this tax plan would personally affect the president and his family. Let's start with what you've reported in the newspaper, in the New York Times today.
Well, it's a great question, and potentially it could save them many millions of dollars, or more than $1 billion, over a period of years, because a lot of the provisions in the tax framework that we're talking about here would benefit the rich. We're talking about the repeal of the alternative minimum tax is going to be a big one, which we saw from President Trump's 2005 tax return. Cost him over $30 million just that year. Another big reason why it could benefit the Trumps is the big reduction to the pass-through tax for small businesses and big businesses like his own, which are structured that way. And then the huge one for the Trump family is the repeal of the estate tax, which means that his heirs, would be set to gain, lots and lots of money, considering he says that he's worth over $10 billion. So this could be a very good plan for President Trump and his family.
And the president, in the number of speeches he's given about this new tax blueprint, has suggested that he's going to be hurt, in fact, by this new tax plan. And your reporting and others is that it could be as high as $1.1 billion.
Exactly. Yeah. I mean, so far the numbers and the details have been scant so far, but what we have seen is that it's definitely going to be, big benefits for the rich. And another big thing is real estate deductions. A lot of the ones that he's made a lot of money off of, or saved a lot of money from over the years, would be preserved in this. And I think you're not going to see those going away as long as he's going to be the one signing the final signature on this legislation.
But do you really see this issue of how he may benefit from his own tax plan, actually having an impact on his ability to push this plan through? I mean, he never released his tax returns, and everyone sort of got over that.
Right. Well, I think Democrats are going to continue to make an issue out of it politically. It remains to be seen whether or not they're going to need any Democrats to get this across the line. But, over the summer, Democrats on the Ways and Means Committee tried to, force the hand of the president to release his tax returns. He continues to say he's under audit. But I think we're going to continue seeing, critics, progressives hammering away at this, that, the president has a big conflict of interest here. He's said in the past on the campaign trail that he fights to pay as little tax as possible. So, people are going to say that that's why he's pushing these policies.
All right, so let's give Gary Cohn the benefit of the doubt that the American people do not care that the president might potentially benefit from his new tax plan. We heard him repeatedly pivot to show how this plan is going to help the middle class, but though he said he can't guarantee that taxes won't go up for some families. So based on what we know, and I know it's not much, how much will this plan help most middle class families?
Well, he threw out the number yesterday that, a middle-class family making $100,000 a year, whether or not that really counts as middle class is debatable, would save about $1,000. The big provisions here that are supposed to help the middle class, according to the administration and the Republicans, are the doubling of the standard deduction, from $6,000 to $12,000 for individuals and $12,000 to $24,000 approximately for families is supposed to be very big. They're also going to be increasing the child credit, but they haven't said by how much. Now, some of the concerns are that families are going to lose exemptions that they currently get, which is going to sort of take away from some of the benefit here. There's other deductions as well that are supposed to be repealed, such as the state and local tax deduction, which a lot of people use currently who itemize their tax returns. So if that's gone, people in blue states, high tax states that currently rely on that could see their taxes go up.
So let's talk a little bit about your reporting. You reported that in D.C., the D.C. lobbying groups are scrambling to get into this tax reform bill, to get their paws on it in a way. And this is supposed to be a pro-business bill, but your article lists off all these associations that are really concerned. The National Association of Realtors, the American Banking Association, it goes on and on and on. What sort of impact do you think some of these business-oriented lobbying groups will have on the process when we consider that it's kind of lean on details, so there's a lot of tweaking that could be done?
Exactly, and that's part of why it is lean on details, because the lawmakers are trying to sort of fend off the coming onslaught from lobbyists. This is a perennial issue whenever tax reform is on the table, because there's going to be winners and losers. So in this case, the realtors are concerned that doubling the standard deduction and getting rid of state and local taxes are going to dilute the impact of the mortgage interest deduction, which is a big incentive for people who are renting to buy homes. So we're seeing that with the bankers. They're concerned about repealing or limiting deductibility of interest expenses, so it becomes more expensive for them to borrow. What we saw earlier this year was the retailers were able to basically kill a big provision that Paul Ryan was trying to promote, which would have been an import tax. They called it a border adjustment tax because of the ferociousness of their lobbying. So the lobbyists have a lot of influence in Washington, and as more details come out, they're going to start picking it apart.
Alan Rappeport of the New York Times. Thank you so much, Alan.